You believe that stocks will move what you call unevenly higher throughout the year. What does that mean?
More of the same, Brian. Last I checked, we're up 5-6% on the year. That's almost 1% a month. That's better than I thought on January 1st. So the news backdrop's pretty good, and it's all about earnings. Yeah, there are headwinds around PEs, and multiples are lower than they were at the start of the year, but the earnings picture remains brilliant.
Well, you've got monetary policy and you've got fiscal policy. They are similar, but they are also different. We know the economy looks good, but do you worry about fiscal policy? Do you worry about monetary policy? Do you think that the Federal Reserve is going to be able to manage us through this?
Well, that's a great question. I think for the moment, the answer is yes. Out in time, we'll have to be careful that they don't overdo it. But in the meantime, we've got the effects of the tax cut that are still kind of about 1/3 of the earnings growth. It looks like earnings will be up somewhere between 20 and 25% on an EPS basis, Brian, and 1/3 of that is related to the tax bill. And that, of course, is causing more spending, more capital expenditures, and that's all part of the reason that earnings are so good.
I guess what's a bit vexing, though, Bob, is that we all know the tax cut bill happened. Analysts modeled those numbers into their earnings, I assume. Why is everybody seemingly so surprised by how strong earnings have been?
Because the earnings keep coming in better than expected. Unrelated, I suspect, to the tax bill, more about top-line growth. You know, much of the improvement we've seen in this business cycle, in this bull market, started with cost-cutting. And then it was other forms of margin improvement. But now we're seeing top-line sales growth. And that's the best kind of growth, the organic growth that you're looking for. So the tax bill is part of the story, Brian, but the above expectation part has to do with operations. Corporate America is doing well.
Yeah. Do you fear, though, that this so-called peak earnings that we've heard about, Bob Pisani has talked about this a bit, that there are some out there in the market who say, yeah, this quarter is spectacular, but it's like a Jack Nicholson movie from the 90s. This is as good as it's going to get.
So from an earnings per share growth standpoint, we're hitting a peak, but we're nowhere near I shouldn't say nowhere near. We're not at the earnings peak. Let's leave it that way. Earnings are up another 20+%. The third and the fourth quarter, maybe not 20+, but close to 20. So we're not at a peak. Whoever's talking about that is talking about earnings growth peak. I agree with that, but earnings peak, not yet.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.